The financial allegations leveled against one of India's wealthiest men, Gautam Adani, have shaken the confidence of the investor community. Last month, US-based Hindenburg Research said it held short positions in the group's securities as they expected 85% downside in them. The short seller's assumption was based on its research findings, which alleged that the Adani Group indulged in improper use of offshore tax havens and stock manipulation. It also raised concerns about high debt and the valuations of the 7 listed Adani companies. Since the release of the report, the crisis engulfing Adani Group has percolated to broader markets, especially banks. Investors have booked profit in the pack as they grew increasingly worried about the group's 2.1 trillion rupees debt. On the bourses, the Nifty Bank Index dropped 3% on the National Stock Exchange between January 24 and February 3. The Nifty Private Bank fell 2% while the PSU Bank Index crashed 7%. Individually, IndusInd Bank has shed the most, followed by State Bank of India, Bank of Baroda and Punjab National Bank. Analysts, however, believe the panic selling has been overdone.
The entire sector is not at risk for a couple of reasons. Not all the banks have lent to substantial amount to this Adani Group. B, if you relate to the net worth, we also worked out. I mean, it is not more than 5-6% of the net worth of the banking sector, this exposure. And as I mentioned in the first point, not all the banks have lent. So there could be 1 or 2 banks which have got a higher exposure. Maybe those banks could remain laggard, but not entire banking sector.
As per the Reserve Bank of India's assessment, bank exposures to group companies were well within norms. Moreover, industry estimates peg the entire sector's exposure at 80,000 crore rupees. Of this, 3 public sector banks account for nearly 50% of this exposure. Overall, global brokerage CLSA believes that Indian banks are funding 35 to 40% of Adani Group's debt. Meanwhile, valuations of listed players have eased considerably amid the persistent sell-off. As per data from Capitaline, SBI's price-to-earnings multiple has declined by nearly 300 percentage points to 11.39 times since January 24, while that of BOB has declined by around 200 percentage points to 7.6 times. Among private banks, IndusInd Bank saw the maximum ease in PE ratio by 125 percentage points to 12.76 times. Given this, A.K. Prabhakar of IDBI Capital believes it's a good time to buy related stocks.
The exposure is very low, and whatever the borrowing he has made, it is more of foreign funds. It is not about India. Okay, so I think exposure is very low. Bank of Baroda results came fantastic, sir, and their exposure is less than 0.5 also. IndusInd Bank has clearly said, they have very less exposure to them. RBI has given a permission to increase their stake till 26%. So there are many things like this which will not impact them. So I think selectively bank can be bought. HDFC Bank, IndusInd Bank, Federal Bank and Bank of Baroda is at top.
On Tuesday, a day ahead of the RBI's monetary policy outcome, the markets are likely to remain choppy amid news flow on Adani Group stocks and corporate results. With a 25 bips rate hike priced in, Deepak Jasani of HDFC Securities says investors would watch out if this would be the last hike before a pause.
So the hints they will look out for is whether this is the last in the series of rate hikes or there are still more of this to come. If they think inflation is going to be higher for some time to come, then it means the rate hike cycle is not yet over. So of course they will say about all these things. It is normal part of the policy statement. But the interpretation of these things would be whether rate hikes have come to an end or no.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.